So now we will begin part one. And as our speakers are presenting during part one, we ask our participants from overseas to type any questions that they may have into the Q&A box in Zoom. These will be answered at the end of part one. Please understand that we will not take questions for these speakers after we close the Q&A for part one, so please get your questions in during these speeches. And also please remember to indicate who your question is for. So with that, we will begin with our first speaker, Shinichiro Shiraki. Mr. Shiraki is the chairman for the Alternative Investment Management Association, or AIMA, in Japan, and is CEO and CIO for Akebono Asset Management. He will discuss an overview and recent trends in the Japanese asset management industry, especially in alternative investment. Mr. Shiraki.
Thank you very much. It is my great pleasure to speak at this FinCity.Tokyo Global Networking event today. My name is Shinichiro Shiraki. I'm a chairman of AIMA Japan and CEO of Akebono Asset Management. AIMA, Alternative Investment Management Association, has more than 2,000 corporate members globally. We have headquartered in London since 1990, so it's a 30th year anniversary for AIMA. And our Japan chapter, AIMA Japan, was established in 2001. I have been involved in alternative asset management business, including hedge funds and private equities and venture capitals for the last 25 years. So today I'd like to speak about an overview and recent trends in Japanese alternative asset management industry. First, I'd like to discuss Japanese financial market in general. As you may know, the largest liquid financial instruments in Japanese market is JGB, the Japanese government bonds, which has market cap of about $10.5 trillion. Due to recent monetary policy, the BOJ owns more than, close to actually 50% of JGBs today. Other major market players in JGB market is local financial institutions, such as banks and insurance companies. Offshore investors own 13% of JGBs, which has been doubled for the last 10 years, but still a small sort of a portion. Although the corporate debt market have been growing recently, the market is still relatively small, and US dollar of $600 billion with 3,351 names. There is so small high yield below BBB rating markets in Japan, but we see some potential at the size of Japanese loan market is dollar of 1.3 trillion, 1.6 trillion, and it has been growing due to current environment. In terms of local real estate market, the real estate in Japan is large, estimated size of the 24 trillion US dollar. However, public REIT, Japan REIT market owns less than 1% of those properties, which is about 200 billion US dollar. There are a few local emerging managers in infrastructure market, but it is still small market, and most of the funds only own mega solar infrastructure. Equity market is most active in Japan. There are 3,700 listed companies with 6 trillion US dollar total market cap. That compared to US, of course, the average market cap of each company is very small, and we are facing succession issue in many of those companies. In Japan, we have local alternative asset managers, such as hedge funds, and buyout, and venture capitals. Unfortunately for AIMA Japan, which represent, of course, in the hedge fund industry here, hedge fund market in Japan is not growing that much for a number of years, but buyout and venture capitals have growing very fast recently. Let me show you some graphs here. So as you can see in the graph, the Japanese private assets have been growing for the last 2 decades. The number shown could be underestimated, as this data provided with breaking would cover probably almost half of the market. So it could be double. In this, you can double estimate this graph numbers. So since 2000, Japanese private asset market, especially local buyers and venture capital, have grown and raised the capital mostly from Japanese investors locally, local Japanese investors. But recently, for the last probably 4 or 5 years, the buyout funds, especially local buyout funds, successfully raised the capital from global investors, endowment and other family office, and those type of investors from globally. So we see here actually the higher number in 2020, even in this the COVID environment. The Japanese market is mostly driven by investors, as you all know. And the most of Japanese investors invest into rather global managers rather than local managers. So this graph shows the investment amount for global managers raising capital from Japanese local institutions. So this blue bar, light blue bar, shows here the number of capital raised by the global managers from Japan. Of course, in local capital investing to the local managers, which has obviously the home country buyers, that the market of the US and Europe is much larger than Japan. So are those investors investing into the global markets. If we look at the hedge funds market, hedge fund has been stable as the total number of assets and also the number of managers. Since the 2015, we haven't seen much growth here. However, this is a large market, and compared to the global the hedge funds numbers and assets, the Japanese hedge fund managers are very small yet. I'd like to show a bit about the history of Japanese hedge fund industry. The hedge fund industry in Japan has emerged in 2001. The Japanese hedge fund industry mostly investing into the long-short, strategies are mostly long-short equity. 2004 and 2005 was the year for Japanese hedge funds. The many Japanese equity long-short managers recorded very good performance, mostly because they long small mid caps and short large caps. So 2006 and 2007, most of the small mid long managers made large losses because of after the life door shock, and the Murakami-san was arrested and late. So that's the small cap and mid cap market has shrunken, and most of those long short equity manager lost a lot of capital. That short-term trading managers were good, but the number wasn't that much. After 2008, 2009, the Lehman crisis, event-driven managers and activist managers emerged in Japanese market. There are a few, but some major arbitrage, the risk arbitrage managers will exist. In 2012, Abenomics made changes Japanese equity markets, and there are more activists and long-short equity managers recorded the good performance or stable performance, but value managers, including the funds manager, recorded poor performance after that. I'd like to highlight lastly the venture capital market in Japan. So I'd like to show the performance of venture capital, the local venture capital. is very good. If you look at the benchmarks of the Japanese venture capital, the most of managers maybe are really good return, highly done, and multiples. So I'd like to let's say that it will be the year for Japanese venture capital's margin. So I believe the private market in Japan in general will be growing significantly for next decades. So there are a lot of succession issues and carve-out from large conglomerates providing buyouts opportunity. And also we see Japanese unicorns emerge, which provide a great opportunity for Japanese venture capitals. So having said that, I'd like to close my speech by saying thank you for your interest in Japanese market.